MD up about 50%. Nice job. Nice trade on that, Ari. Very nice. Yeah, BITX only has dollar-wide spread, so uh, it's kind of hard to take it at this point. It's trading at 32.54, so it's right in the middle of the two strikes. I mean, 32.54, you could take a 32 put and a 33 call if you wanted to, and do basically a strangle on it. A 32 put and a 33 call. It's not going to cost as much, um, but it's got to move 50 cents just to get to your strike. Timing is really important on these straddles and strangles. Where you take them, what the price is at the time. You're trying to get a balance it so when you buy the put and the call, they both cost approximately the same price. Market's still coming in here. This QQQ continuing to move. That's because the triple Qs are continuing to move down. If I get a bounce in the Qs here, if the starts to turn around and head back up again, I'm going to take the SQQQ off. Again, we're in the money on the call side on that because the Qs are coming down. So if it starts to move, if the Qs start to move back up again, SQQQ is going to start coming down in value, and we're up right now, up to about 421. Again, I got a 455 set in there, but I might just take it off here pretty soon. SQQQ up to 440 now. Remember, SQQQ is it's an ultra short, which means it's double X. It's double the move, so it moves double of what the SPY moves, or what the Q moves. Right now the Qs are down this morning 4.5%. The SQQQ is up 12%. That's why it's double hedged and is moving pretty fast right now. And again, you can take this off anytime you want. You can get about 440 right now, 430, 440, 450, anywhere in that range. Just kind of watch the price action, and again, it's still coming in. So it's still moving up toward that 455. It hasn't gotten there yet. Spread's not too bad on the SQQQ. 380 by $4, about 20-cent wide spread on the call side, and about 7 cents spread on the put side. I took mine off at 440. I closed mine at 440. Again, I want to take a chance at a bounce. So it's going for, I would put it in at 430, 440 right now. Take the profits. Again, I'm out at 440. Try to get 430 at least for it. It may move down again, but again, I'm not going to take a risk here, because if this thing starts to bounce, it's going to go back against us. We've got quite a bit of padding between here and back down to the 35. Okay, I'm out. SQQQ. Okay, so I took the SQQQ off. Nice little profit. Again, don't want to trade against a bounce here. Very, very volatile market, so out of SQQQ. for a nice profit. Nice profit on the SQQQ. BidX got for $1.84. That straddle, that's trading at 207 right now. Again, out of SQQQ at 440, trading at 438 right now. And you know, it could keep going, could make a lot more money, but it also can reverse and start going back down pretty fast. Got 438 for yours. Nice job, Oliver. Very, very nice. Joe took 35% off of half of your BidX puts. Nice job. Good job, Doug. Regained your loss. Now you made money on it. Nice job. Nice recovery. All right, so kind of watching here. Q's still coming down. This is a fairly big pullback in the market now. SPY is down almost 5%. Compared against yesterday, it doesn't seem like that much, but this is a big move down in the market. Very big move down in the market. Nowhere near like yesterday's range, but 5%. You figure the market gained 10% yesterday. The SPY gained 10%, but it was down way more than that. And right now we're down 5% on the SPY. Triple Q's down 4.75%. IWM down 5%. Again, took profits on SQQQ out of that that was a nice profit, decent profit on that. And I did take the BidX, took the BidX that Ari had mentioned, took the BidX straddle, $33 straddle, trading at $31.85 right now. BidX, I'll watch the price on BidX. If it continues down, I'll let it go. If it turns around and heads back up again, I'll take profits on it. That's what you have to do on straddles and strangles, by the way. If you're in the money on one of your strikes and you're up decent money on it, if it reverses and starts to head back, you need to take it off, because usually there's a fairly large move necessary to get back down to your other strike, and you're going to lose premium the whole way it goes down through there. Just going to peel away. Like with BidX right now is trading at about 31.90. I got a 33, so I'm up $1.10. I'm in the money $1.10 on these things. I don't want it to head back up toward 33. BidX trading now at 215. So I'm up about $40 a contract on that, about 20% right now on the BidX. Okay, let's see where we are here. Again, SPY still coming in a little bit. Q's also coming in. And again, if we stayed in just QQQ, we'd make a little bit more money, but I don't want to risk any kind of a bounce right here. And I am in BidX. BidX, $33 straddle, down to 32 right now. Again, market's selling off pretty substantially now. Still coming in. This is quite a reversal from yesterday's big run up on the tariff coming off. I guess, listen, the thing that caused the tariff pause yesterday, the 90-day pause, regardless of what anybody tells you, was the bond action in the morning. The bonds were going up in price. There wasn't any demand for them. And you have to understand the U.S. Treasuries, they have to sell the U.S. Treasuries to somebody to cover the debt. That's how they roll our debt coverage. They basically sell the Treasuries. And if the interest rate is skyrocketing on the Treasuries, on the notes, it gets extremely expensive to refinance them, which what they have to do. And we, as I said yesterday, we had an inversion in the notes, or in the Treasuries. So basically, the 5-year Treasuries was more expensive. You get a higher rate on the 5-year than you did on the 30-year. That's called an inversion, and that's not good. You should always be getting more interest the further out in time you go, and you weren't. And that's an inversion. That's a credit issue when that starts to happen, and that's what happened yesterday. And that's why they backed off on the tariffs. They couldn't afford that to continue. I mean, that's what happened in 2008, and it can lead to some real big credit problems. And the tariffs was making that a little bit worse. So that's why the pause, regardless of what anybody says, that's why they paused it. Q still coming in. BidX also coming in. All right, we just got some YouTube questions over here. Kyle, pretty decent horizontal support at this level. If we bounce today, should be here. What do you think? Right now, if I'm looking at the SPY, daily chart, I do have a support level at 519.42, which is right about where we are right now. But we're right in the middle of yesterday's candle, and this volatility is pretty huge. So I'm not sure how well these horizontal lines will hold. But we do have some support here. I wouldn't be looking to try to go long here or anything like that. Would I ask SBLK, seeing it as relative weakness compared to the SPY and the D1, assuming it goes below the VWAP? It's not coming down as much as I would have thought it would today. It's down, 2.5% to something. I don't think I would mess with it. I'd just keep the original position on. I wouldn't be adding anything to it. Ryan, I'm considering a relative weakness on a D1. Well, yeah, it's obviously got relative weakness, and it is a short. Yeah, yesterday's green candle couldn't even get above the previous day's red candle. That's true. That's true. And then they do have issues with shipping in Asia, because tariffs are going to hurt them, and China still has a 125% tariff on. That's going to start to weigh on some things here eventually. But I think there's probably better shorts to try to take than that, to tell you the truth. This thing yesterday kind of messed up the original position on SBLK. And you could go out further in time and just take some straight puts on it um, at a different strike price. We broke down, so you're short now. Yeah, I mean, listen. This is tremendous volatility. If you're trying to play options, it's really hard because the premiums are so expensive on those things right now. So, but yeah, the SPY's break is having a weak day, but we're right in the middle of yesterday's candle. Again, 519.42 on the SPY is a horizontal support level that has been fairly effective in the past. Somewhere around that range, 519.42. Bid X with a green candle. Got a sell order at bid X at 230. 230. Paid 184. I got a sell order at 230. Starting to bounce a bit. But if I can get filled here, I may put another one on at different strike prices. Again, right out of the SQQQ, that kept going. Again, as I said, it could have gone higher, could go higher, which it did. But as the market started to bounce, I'm not gonna risk it because I don't know if and when a bounce is gonna come. Q's moving down right now. The SPY's still weak, and bid X coming back down again. Trading at about 227 right now. Again, I got a 230 sell order in it. I'll just take it off, and then I can focus on some other things. So I didn't see that. Sorry, did I choose an exit price for bid X? Yeah, I just took it off. I'm out of bid X at. I got out at what did it fill me at? 230. And it's trading at 237 right now. Again, this can be a pretty volatile index because it's double hedged, so it can really move around. But I'm out of it right now. I took about 60 cents on the thing, so about 25% profit on it. I'm gonna lock in profits on these things today because this is a volatile market. We could get a bounce out of nowhere anytime, or there could be a piece of news come out or a rumor comes out. So again, could it keep going down? Yeah, of course, the market could continue to fall. But we are inside of yesterday's candle and likely to stay inside of yesterday's candle. But this is a big drop in the SPY. We're down 5.5%. Forget about yesterday's 10% gain when it went from God knows how far it was down. It went from a low of 493 to 548. 55 points. I mean, that's a massive move on the SPY. Probably the biggest one in years for a recovery. And today we're giving a lot of it back right now. Anyway, I'm on a bid X. It can keep going. It's trading at I get out for 230. It's trading at 227 right now. SQQQ is also continuing on down. Could have got more money on the SQQQ. But we got a nice profit in SQQQ, so I'm never unhappy about leaving money on the table if I took a decent profit on it. BTX filled at 230, good job. Joe, you're out of the rest of BidX at 55% on puts. Nice job. Okay, so I'm out of the BidX and I'm out of the SQQQ straddles, and both of those work pretty nicely. Again, we'll pocket the money, and then we can always do another one. So Q's.
Numbers being posted in the news does is a link to the World Ag Supply and Demand Estimates, the WASDE report.
5.5% down on the SPY today. This is one that was a Genova, that was a Momo a few days ago. Moving up today. Again, the volume is nothing like it was. 7.5 million shares. There's a lot of shares for that one, but again, the day that I traded it was back at it did 25 million. Today it's done about 2.5 million, so quite a big drop in the volume, but it's still a decent setup. I'm not touching anything right now as far as this one is concerned.
Members, taking a quick market update, we're seeing weakness continue across the board in all indices. Members, nothing specific news-wise in regards to these drops that we're seeing. Traders are trying to pinpoint one area to focus on in regards to this weakness. Could be currencies, could be yields, bonds, VIX, but markets are at lows of the day. The Dow down 4, spot 2%. S&P down about 5%, and Nasdaq down 5, spot 7.
Still going down here pretty hard. This is really insane volatility here. We look at this market today. We say we're down 5.6% in the SPY, and you yawn because of compared to what it did yesterday. But this is a big drop. Remember, we had those big drops last week. They were 5% and 7%, and everybody was freaking out. And this is an ugly candle here today so far. Anybody got long overnight based on that big run up yesterday and the news of the tariffs being paused is trapped right now. Again, anybody that was long yesterday, last overnight, based on that big green candle yesterday after the tariffs got paused, is in tough shape here this morning. They're getting squeezed pretty hard, and they're not going to be able to stay in the longs. SPY still coming in.
Some comments out by Freddie Mac mortgage indicator. 30-year FRM average at 6.62%, down from last week when it averaged 6.64%, and from last year when it averaged 6.88%.
Huge volatility here in these option prices. Crazy. If you get the direction right, you do great. If you don't, you get clobbered. That's the way this is. This is a lot of risk either way in any of these things right now. I'm just watching these SPY options on this little move right here. This little move right here in this little bitty candle, those SPY options moved about 40 cents. And this is a really huge volatility, so be very, very careful. I mean, I traded a few SPY puts and was up about $50 a contract in about I don't know, 30 seconds, 25 seconds. But you know, it can reverse on you just as quickly, and it's this really risky. And it was a little far extended right now from the 15, obviously too far extended from the VWAP. A little after 12 o'clock right now. Market's selling off pretty hard right now. SPY deck coming up on 6% to the downside, 5.8%. Qs as well, 5.6%. Again, I'm out of the SQQQ. Took profits in that. Could have got some more, but I'm happy with that. And the BidX, I also took profits in the BidX straddle, the $33 straddle that Ari had called out. I liked it, took it. Get in at that at $1.84. I get out at $2.30. Going for $2.28 right now. And again, see a little bounce like that in the SPY. Those options just dropped from 521 to 441, right there. That's how much volatility you've got here. That's why it's best to really be careful here. You want to, a little bounce like that will just wipe out 80, 90 cents on an option before you can blink. Half off, 55%. Joe, nice job. Short of the SPY at 523. Market's starting to bounce here, and we expected some sort of a bounce at some point, which is why I wanted to be out of this SQQQ, and I did. And again, I'm out of BidX right now. which as you can see is also bouncing up. So took both of those off, then we can back and we can reevaluate a little bit in a bit to see if we want to do something else. In other words, take the money, get out, don't look back. Don't use the rear view mirror and wish you had stayed in things longer. I mean, people that look at that big, huge green candle yesterday and think they missed the boat, you know, they missed the boat how? I mean, what? They were just gonna. They think that they, in retrospect, they were just gonna catch that and catch that whole thing. It's, good luck. A little bounce in the market here now. All right, see if we have any questions. Nope, that's about it for right now. See how the YouTube is going over here. Yeah, how much, Ryan is right, how much could I have made, how much could I have lost? Listen, everybody when they puts a trade on, most traders, what they think is about how much money can I make on this trade. And but the first thought that goes through, should go through your mind when you're planning a trade is how much can I lose on this trade? Because that's where your danger is. Not in how much you make. The danger is in how much you lose. And that's why when you structure a trade, you've got to know exactly what you've got at risk. Every trade we take in the room over here is a defined risk. We can only lose what we put into it. We don't have anything other than defined risks. When you're selling naked calls or naked puts, especially naked calls, you don't have any. You have unlimited risk. Hey Thomas, welcome. Hey, appreciate you coming in and listening. Yeah. I put if you go to rightlinetrading.com, you can we've got you can join the room. I get in a room and an alert service, and the software, which is right here. This is the SPY Super System software that identifies when institutions are coming into trades and out of trades. We use multiple time frame momentum here, current time frame momentum here, long-term trend right here. This is basically a gear indicator that with the momentum stripped, with the divergence stripped out of it, is pure momentum, and it's been very, very accurate for us to use on here. We don't have a lot of indicators on here. The VWAP right here, the 15 VWAP here, pivot point here, this white line, 15 EMA right here, which is these are the ones we trade our intraday trades off of. And then of course, if you switch to a daily chart, you're going to be using all of these. But on the 5-minute trading, when you're just doing quick intraday trades, just use the current time frame momentum right here, which obviously is red is right now. Red and yellow is bearish, green and blue is bullish.
Goolsby says the hard data on the economy looks pretty good.
All right, so we're out of all the trades I put on here. The SQQQ, the IBIT, and the BidX out of both of those for profits. Nice profits in both of those this morning. SPOK still kind of floating around 1330 here. Again, that was one I got out of yesterday because I forgot to reset my sell order to $2. I hit it at 175. I got closed out 175 near the open, and then it bounced, of course, on the big move up yesterday. So right now it's still underwater, but I would hold on to it for right now. SPY with little bounce as we head into lunchtime. And I'll be going to lunch probably about 12:30, probably about another 20 minutes or so. You're right, Oliver. It takes years of market beating that lesson into you about looking at how much you can lose first before you think at how much you can win. Most traders, that's how they go into a trade. How much money can I make? That's why traders take these out of the money calls and out of the money puts, thinking that the stock is going to move up in their direction and they're going to make all kinds of fortunes on it. And taking out of the money puts and out of the money calls. Let me reiterate: trading a strategy that uses out of the money puts and out of the money calls, unless you're doing just like a lotto on a Friday afternoon, is a losing strategy. You're not going to make consistent money on that ever. Oliver, you can't tell you how much pain your fund manager friends are in who are selling leverage naked puts. Yeah, for free money. Yeah, they can get free money, all right. But you know, when you sell naked puts, you better be prepared to take assignment of the stock. The only reason you should ever sell a naked put on a stock is to get into the stock or get it assigned to you at a lower price, and you want to own it. If you're selling it just to bring in premium, you're going to get really hurt. Doug, do breakouts usually work? They can pull back for a big loss if taken. Um, or is it usually a better probability of profit to wait for a pullback after the breakout to enter? You know, it depends on what the breakout looks like. It depends on what the price action is. There's no black and white answer to that. You know, when you're looking at a breakout, you want to know what was the price action that got you through that breakout, and how far extended is it? Typically, if it's coming down and then moving up, I much prefer to take trades when they come back to support after breaking out, come back to support and then bounce. Oh, you know, or vice versa on the short side. That's right, Simon. The old proverb: a novice trader looks at each trade how much they can make. Successful trader looks at each trade and see how much they can lose on it. And that's the mindset you really need to get into. Everybody needs to be in the mindset of when they're analyzing a trade. All right, how much can I lose on this trade? Not how much can I win, because everybody thinks about how much money they can make. And that's great, but that shouldn't come first, because your risk is the most important thing. I mean, if you don't have any money, if you lose your account balance, you're out of business. I mean, your cash, your actual cash that you have to trade with, is like owning a store. That's like your inventory. Okay, that's like being having a furniture store and you have that's all your furniture. If there isn't any furniture left in the store, nobody's going to come in to buy anything. So you can't do anything. You're out of business. Oh, Doug, you had your sound off? Okay. All right. Yeah, he's talking about breakouts work that can pull back for a big loss. I mean, they can all, and listen, anything can always pull back, especially in volatile markets like this. Is it usually better the probability of a profit to wait for the pullback after the breakout to enter? You know, theoretically, yes. I mean, theoretically, depends on the structure of the breakout. But in a breakout that goes out, if it goes through, you kind of want it to come back. In other words, you're looking for the bounce, the pullback, and then the bounce back into the trend again. Those tend to be more successful. But all of this breakouts depend on what was the price action when the breakout occurred. I mean, yesterday was an example that's likely not gonna happen again for another 10 years. I have only seen that 2 or 3 times the whole time I've been trading. But basically, it really kind of depends. If the stock's coming down and it breaks out after coming down shallow and then breaks out above the VWAP, for example, that's probably an okay entry. Uh, but if you break down hard and then come up through the VWAP and you're looking to go long as it breaks through the VWAP, probably better to wait for a pullback to the VWAP and then a bounce. And sometimes you're going to miss trades doing that, but that's just part of trading. I mean, a lot of times you've seen the 8 and 15 EMA being respected on the 15 minute. in the 30-minute time frame. Do I take my day trades only off the 5? Yeah, I only take it off the 5. I don't look at the 15 or the 30, and I'm looking at the VWAP, the 15 EMA, and on my TC2000 chart, I also have the 8 and the 15 up. What I found about with the 8 and the 15 EMAs is that I used to trade with just the 8, and if I was long a stock and it broke down through the 8, then I take a loss on it. If it closed below the 8, I take a loss on it. But what I found is a lot of times on the daily chart, the stock will break through the 8, bounce off the 15, and so I use them in conjunction with each other. And I do the same thing on the 5-minute, but I don't switch to 15 and 30-minute time frames. For intraday trades, I mean, if you're doing intraday trades, 30-minute time frames is too long. I mean, you're just trading off the 5-minute. If you're looking at the 30-minute, a lot can happen. Kyle, listen, I understand you had a last rate of 60% rate and a two profit factor, which is pretty good, trading the 0 DTEs on the SPY. But this is very, very tough trading. It's very risky trading. Now this year you're trying to trade futures. Futures are really hard because you're much more heavily leveraged in futures than you are in 0 DTEs. 0 DTEs you're just paying for the options. But you have to take a look at what the volatility is like. Even if you're trading 0 DTEs and you're trading a move down or move up, and then the market chops around for a while, 0 DTEs can get killed just by time decay coming out of them. And now you're trying to do futures, and you're trying to use trade in a prop firm for 4 months. I listen. My advice, and this is for anybody who's not a seasoned trader and been doing it for a while, is don't trade futures. Trade stocks. I'll trade the indexes sometimes, and the SPY Super System is definitely trading the indexes, but it's not futures. It's not the futures. Futures are they move very fast. There's big losses and big gains. Can't comment on prop firms. I don't. I've never used a prop firm. I always just trade my own money. But I know a lot of people who have started trading, try to trade futures themselves when they start off as a trader, and they blow their accounts up. Happens all the time. And this is a tough business. Let's be honest. Market coming back down again now.
With the Nasdaq down 6.6%, S&P down 5.8%, and the Dow down 5%.
Dow down 5% here.
Members, keep in mind one tidbit. We are watching these halt indicators.
SPX down 5%. Now, if the market falls 7%, they're going to halt the market.
S&P is calling it down almost 6%.
SPY down 6.6% right now. We're very close to circuit breakers here on the market. SPX is down just 5, so I'm not sure if it'll kick it, but we may get a circuit breaker halt on the market today. Haven't had one of those in a long time. Yeah, I don't know what happened, Simon. The auto went, the auto came back. I had a note that the auto went off. Something broke down. I didn't do anything, so. This is really a pretty brutal move down. I mean, I'm not going to say we're going to give up all the gains we got yesterday, but this is a pretty big candle right now. Dow Jones down 2,120 points.
Members, the Nasdaq now down over 7%. Keep in mind these indications halts are for the S&P 500.
Q's down over 7%. That's not. It's the SPX that they halted on. A little bit of a bounce here now in the SPY. Didn't quite get to it. All right. 12:24. I'm gonna get some lunch in a minute. Might have a halt to take care of it. It is bouncing here just a bit, so. Quite a brutal beating here though right now. Look at the cascading up list. Nothing. Can't remember this. This is all. If we look at the SPY daily chart right here, here's the candle today. Okay, we went right down. Notice that 432.74 right there on the Qs. Bounced right off of it. SPY right here, down to 510.27. This is a look. It's just an it's a inside candle, but look at the size of this thing. This is volatility for you. It, again, been quite a few years since I've seen anything like this. Oh boy, oh boy, oh boy, oh boy. Oh, I've never seen anything like this. They're close to halting the market. It's down so much.
Members watching this VIX up 58%. Currently at 53.14. That's the VIX up 58%. Highs of the day.
I've never seen anything like this. This move yesterday was the market jumped about from the low to the high about 20%. 20%. That's huge. And today we're down 7%.
Oh, he's trying to be funny.
Good Lord Almighty.
When everything Trump touches dies.
Oh my God! It was the bonds that did it yesterday.
Oh yeah,
let's go out and pee. Come on. You want to go see Ruth? There she is. She's right there. He's looking at you. Come, let's go pee.
Hi, Boo-Boo.
All right, gonna get ready to eat here in just a minute. Market get very, very close to the halt, but now the market's bouncing a little bit here. I'm not in anything right now. I took profits in SQQQ, took profits in the BidX, so I'm not in anything. I know some people are still in SBLK. I haven't looked at that recently. I did close it out yesterday. It's still coming down, not as fast as the market though. Pretty ugly candle here on the SPY today. SPY down 6.08% right now. We mentioned Costco early this morning. I said they had to get through the 50, confirmed through the 50, went through the 50, and went right to the entrance of that gap fill. If you have these gap fills on your chart, these resistance to these gap fills are usually pretty strong. So even though Costco looked good today on this move, I was not going to even think about buying Costco until it got into this gap and confirmed in that side of the gap, because those are very good resistance levels, which is what you can see over here. See the gap right there? That's what it went into, and it didn't get to it, and it failed there, and then it failed right back, and then now it's dropping with the market. And Walmart, see, look at the inverted hammers that are showing up on the market here today on these stocks. Anybody who went long yesterday thinking the market was going to go up is in serious crap today. I mean, I've been trying to keep our risk very low, keep our number of trades down, using straddles and strangles, so I don't care what direction it goes in. We did take what I thought was some decent shorts. We had PBR the other day, which was a nice short, and then we took SBLK before it got hit by that big bounce yesterday when they paused tariffs. But a lot of that is being given back up today. So we'll see where we go this afternoon. But again, knowing the trading conditions have been for recently and how volatile it is, I have been in the room. I've been trying to encourage people to keep their risk way down, if trading at all, and trying to keep you on the right side here, so that you don't get overextended on your skis. This is the kind of market that's going to wipe out a lot of retail traders. These moves like yesterday and then today, people that were short yesterday get squeezed. People that got long today are getting crushed, and this is where accounts get blown out. That's why premiums were so high on the SPY yesterday. Options that used to cost $2.20, $2.30 were going for $7. What do you do when you see a situation like that? You don't trade. You stay away from it, because there's way too much risk. Look at this little bounce here. This is now that people are in short and getting trapped. This is just a nightmare for trading. Kyle, yeah, see when you're trading at a prop firm, you're talking about getting a payout in a prop firm, and you said you blew your funded account by basically a penny. What they've got in on their controls. In other words, if you make money on a prop firm, your account's up money, but they have very strict limits on how much you can go back down again, and that's really hard because it's hard to stay inside of that range of not losing. If you go up $4,000 or $5,000 and you can only drop down another $2,000, you squeeze yourself in. And the problem is most of the time, when you're trading like that inside for a prop firm, you're going to take a loss that's going to exceed what they allow, which means the account's gone again. You got to start all over again. Yeah, I think that's what I would do if Kyle, is I'd focus on trying to trade equities, and because you can use relative strength and relative weakness with stocks, and that's much easier to trade stocks than it is to trade futures, because you've got relative strength and relative weakness. You can weigh against what the market's doing and what your stock doing, and that makes a big difference. So it makes it easier to trade. Yeah, it doesn't encourage the props doing encourages a gambler's mindset, because you got to keep winning. You got to keep winning, and as soon as it goes down below the level that they set, then you're blown out, and you got to start all over again. Sure, you're using their money, but then you got to pay to get it reestablished again. So I'm not a fan of that, but personally, but my feeling is if you're a good trader, you can make money with your own money. Why should you give them anything? Okay, we're getting a little bounce here. Market pulled back pretty hard. A couple of tails here giving us indications that there was buyers coming in at these levels, which is indicative of a move back up again. Nothing I'm going to jump onto, I'll tell you that. All right, I'm going to get some lunch here, and I'll be back in just a bit. Another pretty wild morning. Yeah, Oliver, I agree. The prop firms that they have trailing drawdowns. So as you make gains, it's a trap, and you got to keep on winning. And what happens is if you start getting close to your drawdown, you tend to take bigger risks to try to keep it above there. And I don't know. I don't like them. A lot of people I know. Listen, millions of people trade these things, and but they're in business to make money here. And they make a lot of money by people getting their accounts blown again and starting over again, and blown again and starting over again. Yeah, one bad day with 3 or 4 good days, and you're out, and you got to start all over again. Didn't cost you anything except what it cost you to get the position set up, but you've got to keep doing that over and over again. I mean, I know people who are good at prop trading, and they actually make money prop trading, but it's very tough, very tough. And I always, people ask me, are you considering trading prop firm? People have asked me this all the time. And, I'm trading my own money and doing well. Why should I do that to use somebody else's money? Which case I can't trade the way I want to. Do I take drawdowns worse than what I could take in a prop firm? Sure, of course. But it doesn't blow my account out. I can go right back the next day and trade again. All right, gonna get some lunch. I have to close down the YouTube feed now. Thank everybody from YouTube. I appreciate everybody who's out here. There are a lot of people in here today. I appreciate that. Again, rightlinetrading.com. If you're interested in checking out my room and my alert service, you can see we haven't done an awful lot today. We took a We took a BidX strangle and made about 25% on that. And we haven't done a lot of trading. It's too volatile, it's too expensive right now. All right, thanks for everybody on YouTube. I'll be back tomorrow, wrap up the week on a Friday at about 11 o'clock. See everybody tomorrow.